Russian economy has made a 45% downfall, and almost $200 billion has been wiped from all major indices. If you're like a lot of investors this year, the stock market as a whole has been selling off. Here you can see my portfolio that is down almost 6% year to date, with top holdings like Google, Salesforce, Microsoft, VICI Properties, SCHD, and other renowned names as retail investors shift away from growth stocks and into commodity and value-based assets. It is becoming increasingly difficult to sift through the tremendous amount of fear and uncertainty in global markets. So how can you make money from it? Here's an excerpt from Peter Lynch, who is a fund manager that averaged a 29.2% annual return throughout his career.
So that's what I want to talk about. And the single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say, the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it. And that's true, I think, about 80% of people that own stocks. And this is the kind of stock people like to own. This is the kind of company people adore owning. This is a relatively simple company. They make a very narrow, easy to understand product. They make a 1 megabit SRAM, CMOS, bipolar risk, floating point data I/O array processor with an optimizing compiler, a 16 dual port memory, token ring interchange backplane, and it does it in 15 nanoseconds of capability. Now, if you own a piece of crap like that, you will never make money. Never. Somebody will come along with more whetstones or less whetstones or a bigger mega flop or a smaller mega flop. You won't have the foggiest idea what's happened. And people buy this junk all the time. I made money in Dunkin' Donuts. I can understand it. When there was recessions, I didn't have to worry about what was happening. I could go there and people were still there. I didn't have to worry about low-priced Korean imports. I mean, I just didn't have, I can understand it. And you laugh. I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle.
Now, the irony of this video is being seen currently today as almost every single company in the stock market has been selling off on the doom and gloom fears of interest rate hikes, Russian invasion, the coronavirus pandemic, and other short-term events. It's human behavior for people to react when you see negative information, much like we're seeing right now. Hi, my name is Zachary Tassaus, and today we're going to be discussing the Russia-Ukraine war. One topic in particular is where you should be correctly investing your money to best outperform the market. We've seen enormous transitions over the first quarter of 2022 throughout markets, and it can be insightful to confront these current issues. Much like Peter Lynch, you too should be investing in stocks you're familiar with. They have a great future outlook, have strong fundamentals, and positive investor sentiment. My goals for investing during this recession are to focus directly on undervalued companies with strong quantitative and qualitative aspects of its core business. Here are a few questions to ask yourself when investing in certain companies. Question number 1, what does the company do? Question number 2, is the company profitable? Question number 3, what is the company's earnings history and outlook? Question number 4, how richly is the company's stock valued? Question number 5, who are the company's competitors? Are there better competitors? Question number 6, who runs the company? Question number 7, last question, how clean is the company's balance sheet? All of these questions play a significant role in allowing someone to decide on whether or not to invest in certain companies. When this corresponds to the Russian and Ukrainian conflict, it can be difficult for people to fathom the effect of war on certain industries in the global economy. The safest and easiest method of outperforming the stock market is through consistent and rigorous dollar cost averaging. Like myself, I have continued to invest for several years into companies I personally believe will grow 10 years from now and beyond. A paper written by Harlan Vaughn perfectly explains my current stance on this global crisis. Taken from the article, stocks have plummeted since President Joe Biden announced sanctions against Russia, and though the market opened lower on Thursday, it closed on an upswing. The stock market opened higher on Friday. This situation is an example of how you can't be reactive to news in investing. If you woke up and sold your investments because of the war, you would actually have lost to the market the next day after. If you're the type of investor to sell in these situations, make sure to remind yourself that it is not uncommon for market corrections to occur, and it is normal to happen. People who can manage to buy stocks when most are selling will certainly be capable of outperforming the market year over year for the long run. As always, I have included in the description of this video a detailed sources list where you can access the same resources I did while making this short video. If you enjoy the content and would like to see more, feel free to drop a like, subscribe, and comment with any suggestions for future videos.